How do money market funds work in Kenya? What are the returns that they offer? What are the risks? And what should you know before starting to invest in a money market fund? Hi, welcome. My name is Fenwick, and I talk about personal finance and financial literacy. So, have you ever wondered how money market funds work in Kenya? Maybe you try to ask like how they work. How do I start investing in them? What is the minimum investment? Which ones are the best money market funds? So in this video, I break down each detail on money market funds, what they do, and just how to begin. So I'll walk you through everything that you need to know. We shall look at how they work, how they are managed, how they are regulated, and who regulates them. Why are they one of the most popular investment options in Kenya right now? And so let's start with the basics. What is a money market fund? Now, when we talk about a fund, we talk about money that has been put together. So a money market fund, to be specific, is a type of a unit trust or a collective investment scheme. You will come across these letters, CIS, collective investment scheme, that puts money from many investors and invest it in short-term, low-risk financial instruments. These include things like treasury bills, fixed deposits, commercial papers, and government securities. The main goal is to preserve capital so that the money that you have doesn't get lost, while at the same time earning modest but consistent returns. When you invest in a money market fund, you are buying units in a particular fund. For example, if this one is a fund, and inside here they are got units. So when you invest in this fund, you are buying part of the buying units that belongs to this fund. The value of each unit, the one that you bought, will remain relatively stable, and the income generated from the fund investment is credited to your account either on a daily basis or on a monthly basis. This depends with the policy of that particular fund. So in a nutshell, we are saying that the fund invests your money, the one that you give it invests the money, it earns interest, then it deducts its management fee and passes the rest back to you in terms of return. Money market funds in Kenya are regulated by Capital Markets Authority. And what's the function? It just ensures that every licensed fund adheres to the strict investment rules, regulations, and standards. Section 2. How are money market funds managed? Every money market fund in Kenya operates under a structured management framework that ensures transparency, accountability, and adherence to the rules and standards and regulations. So these are the 5 main parties that are involved. Number 1 is the fund manager. The fund manager is the person who is licensed, so not the person but the institution. This is the licensed financial institution that's responsible for managing day-to-day operations of the land. They decide where to invest, for how long the investment will be invested, and in what proportions. The good examples are Old Mutual, CIC, NCBA Investment Bank. So that's the fund manager. Number 2 party is the trustee. The trustee acts as the guardian of the investor's interest, the one who guards your interest and my interest. They ensure that the fund manager follows trust and Capital Markets Authority regulations. Trustees are usually large financial institutions or trust companies that are also approved by the Capital Markets Authority. Party number 3, another party involved, is the custodian, or known as the custodian bank as well. The bank holds the actual money. Of course, the work of the bank is to temporarily hold money. So it holds money and the investment securities of the fund. There's a separation between the fund and the custodian. So this separation ensures that even if the fund manager collapses, the investor's fund remains safe under the custody of the custodian bank. We have got the auditor. The work of the auditor is this is an independent body. The auditor independently reviews the fund's accounts each year to ensure transparency and accuracy. Then finally, we have got the regulator. This is not in the fund per se, but uh, they're outside the fund. And so the Capital Markets Authority oversees all these entities just to make sure that now it licenses the fund, it approves its structure, and monitors compliance to protect investors from mismanagement or fraud. Now, this structure, the fund, the trustee, the custodian, the auditor, and the regulator, the, their collaboration is what makes money market funds safe and a transparent vehicle to invest your money in. Now, how do money market funds work? We shall do a step by step. This is not detailed, just a pointer step by step, just to show you how money market funds. So here the step by step process of how money market actually work, how they work behind the scenes. The investors pool their money together. You and me want to invest, we put money together. So that when you buy a unit, like the example that I was using, your money joins thousands of other investors' contributions so that it becomes a chunk of money in a fund. The manager, we've talked about him, the manager invests that pool of money in a safe, short term financial instruments such as treasury bills, bank deposits, and corporate paper. So the fund manager invests that money. The fund earns interest. The money that we've invested earns interest because that's essentially the purpose of investing. It earns interest every day, on a daily basis or on a monthly basis. The fund deducts the fees because it manages your money. It deducts the fees. Different funds have got different management fees. The fund manager takes a small management fee and any trustee or custodian fee that are also deducted. The remaining profit is distributed to the investors as returns. So both you and me who put money there for investment purposes, now we get a particular return after those fees have been deducted. Now, in most cases, this is normally credited daily and you can withdraw or reinvest it back into your investment portfolio. Now, there's liquidity and access. Depending on the fund, you can withdraw your money on the same day or the next day, T plus O or T plus 1, or within 2 business days, T plus 2. Taxation. In Kenya, the returns from money market funds are subjected to a 15% withholding tax, which is automatically deducted before you receive your net return. For example, if your gross interest is 1,000 shillings, 15% withholding tax is applied on that, and then that is, I think, 150. Then you get the other one, and now as your net return. So when you hear that the fund is paying 10% per annum per year, that's usually the net annual yield after all the fees and taxes have been deducted. Why should you invest in a money market fund? There are several good reasons why you should invest in a money market fund and why they are becoming common investment avenues or vehicles in Kenya. The first reason, better returns than bank savings. Banks will give you at 4%, 5%, money market funds will give you at a relatively higher rate. Liquidity and flexibility. You can access your money or funds quickly whenever you have an emergency or whenever you have short-term goals without penalties. Reason number 3, low risk and stability. And we get this from the fact that money market funds invest its money in short-term, high-quality securities, so they are less affected by market fluctuations. And then professional management. They're professionally managed. We've talked about the hierarchy or the structure of the managers. Then finally, diversification. Your money is spread across multiple institutions and instruments. This reduces the impact of risk and other defaulters or issue default that might happen. So, money market funds are essentially for anyone who wants their money to work for them safely, steadily, and accessibly anytime you want to access your money. So, how do you choose a good money market fund in Kenya? When comparing different funds, keep an eye on these key factors. Number one, net return. After the fees and after the taxes, what is the net return? Look for the most recent effective annual yield. Number two, liquidity. How quickly can you withdraw your funds? Number three, minimum investment. Some funds allow entry with as low as 100 shillings, others require more. Then reputation and consistency. Choose funds with a solid track record and that are very transparent. Then finally, the fund has to be licensed by the Capital Markets Authority. So always confirm that the fund is listed on the Capital Markets Authority's official register. So if you follow these checks, you'll be confident that your money will be both safe and productive at the end of the day. So this is what we have said in summary, that money market funds in Kenya are collective investment vehicles that pull money together from different investors and invest in short-term, low-risk securities and distribute the returns back to unit holders once they make profit. That's me and you. We have also said that money market funds are licensed fund. They are managed by licensed fund managers who they are monitored by trustees and they are held securely by the custodian banks, all under the oversight of the Capital Markets Authority, which is the oversighting body. Finally, we have said that money market funds, they offer better returns as compared to banks. They provide liquidity, then they give you a peace of mind knowing that your money, your investment is professionally managed and regulated. So if you are looking for a smart, low risk, high liquidity way of investing your money, consider money market funds. We have done a video on the best money market funds in the country. I'll attach them for you to have a look in the description. That is it for this video, and I'll see you in the next one.